Hey, 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 welcome to tonight's free home buying workshop. It's your favorite homegirl, except this time I am officially your licensed realtor homegirl who is here to assist you and support you as you buy or sell your dream home or start your dream of becoming a real estate investor. Tonight, you are in for a treat. We have an action-packed session where we are going to cover how to get your credit mortgage ready. We're going to talk about secrets to turning your income and credit into property power, budget planning, the lending process, mortgage options, and I have the mortgage girl, the money girl here to join us tonight. So my girl Nikema is a seasoned creative finance strategist. When I hear creative finance strategist, that makes me feel like she's going to help us figure out how we can turn whatever our financial situation is into a future in real estate. She is a mortgage specialist with over a decade of experience in the mortgage industry. And I am excited to introduce her to you all tonight and excited for you to get this information so that you can become an investor. We often talk about generational wealth, but we don't often share solutions or strategies to actually start building that wealth. And as you know, real estate is one of the most tried and true investment strategies. And so I am super excited to be new to the industry, but here to share with you all someone who ain't new to this. She is true to this. So without further ado, welcome Nikema to
Hello, everyone. Such an honor to be here this evening. And I just want to thank Coriel for hosting this event with me because I know you could be anywhere. It's Tuesday, right? Tackle Tuesday somewhere, but you are investing in yourself. So I definitely want to applaud you for taking this time to be here. And thank you again, Coriel, for hosting this with me.
No problem. I'm going to go ahead and add your screen and then you can take it away.
All right. All right, so tonight is going to be an action-packed webinar. What we're going to be talking about is how you can build your real estate empire. I know Coriel, did such a wonderful talk about who I am, but really I am Nikema Tureen. I am a financial educator because I truly believe that the only way that you're going to be a homeowner if you know the ins and out of the process, because many times you may think, you hear a lot of myths and you hear a lot of things online and you don't know what you need to do in order to reach that home ownership goal. And I am South Florida leading mortgage broker and also the CEO and founder of Knot and Key Co. So Knot and Key Co is the premier wedding planning company, and we uniquely combine financial services. So while the couples are planning their wedding, we also teach them strategies on how to save for their first home so that way they can build wealth and love and build a lasting legacy. At my core value, I truly believe that home ownership is your birthright. It is your birthright to become an investor. It is your birthright to have wealth. It is your birthright to go from renter to owner. So tonight, I want you to really focus in changing your mindset to have a desire to win, because the only way you're going to achieve that goal of home ownership, if you're not a homeowner yet, or even the goal of becoming an investor, if you currently own a home, is to have that desire to win. And start thinking about how you can change your financial narrative. If you don't have the money to buy a home, how can you save to have that, down payment? And truly, home ownership is a good vehicle for you to build wealth. So by the end of the webinar, my goal is for you to really become more financially cognizant. Learn how you can diversify your income, build your savings, and also understand the power of credit and understand the steps of owning your home. So the homeownership process is really simple. The first step that you need to do is to get pre-qualified for financing. And we're going to dive deeper into that. The second step is to find your realtor. No need to look any further because you have your favorite homegirl Co. That's going to help you. Once you get mortgage ready with me, then the next step is to lock in with Co so she can help you find that home that you desire. Then the next step is going to be you looking at properties, the properties that you like. Then you will submit an offer. And after your offer is accepted, then you go into actually having that executed contract. And once you have that executed contract, then the loan is submitted back to the lender for approval. So we'll go into that. This is just an overview of what the home ownership process looks like. And then you will close on your home loan and you will become a homeowner. And then you can have a home to call your own. So everyone that signed up today, I really want you to be part of the Homeowners Rewards Club. You know, as a homeowner, you get so many advantages. And if you lock in with me, you know, my company, we have a lot of first-time home buyer programs that we offer. So I definitely want to be able to give those to you. So wherever you are right now, if there are any distractions, I just want you to don't look on your phone. This is not the time for you to go online. You really want to be focused and devote this time to learning and getting the information that you need. So that way in 6 months to a year, you can really make, you know, check off home ownership. So that way it's no longer on your board, you know, your, what do they call it? What do they call those called? The dream boards, I forgot. But I'm sure you guys know what I'm
A vision board.
Yeah, the vision board. Yes, thank you. Yes. So that way you can check that off. It's no longer a vision, it's a reality. So grab your pen and paper, take some notes as I'm going through this presentation. So if you have a question, if there's anything that you're unsure about, so that way I can do my due diligence to really take the time to answer those questions for you. And Cole will help facilitate that for me. You know, I cannot get started without, again, I'm big on mindset. And, you know, these are my mantras. You know, this is what helps me, you know, going. And I really want you all to, you know, recite those declarations with me. And Cole, you can recite it with me as well. So to give them, you know, some motivation, so to get their mind right. So the first thing I want you all to say is, I observe my thoughts and entertain only those that empower me. I make wise financial decisions. I am an excellent money manager. Money comes to me easily and frequently in various ways. Oh my God, let's say that one again. Money comes to me easily and frequently in various ways. My mind visualize my goals as already done. I commit to become a homeowner. And home ownership is my birthright. Yes, it is, because God gives us the power to build wealth. And it is definitely our birthright, as I mentioned. You know, how did that make you feel reciting these affirmations? You know, you're going to be one step closer to your goals. So how do you really diversify your income? You know, 80% of it is mental. You know, if you believe that you're broke, guess what? You're going to be broke. But if you operate in wealth, if you operate in excellence, and that's what your life is going to be like. So that's the reason why it's important to, you know, say positive things about you. And, you know, and the 20% is, you know, just taking the action and actually, you know, having a budget, because most people don't have a budget. I look at bank statements every single day. And when you're looking at how people are spending money, they have no idea what's going in and what's going out. So that's why you have to become a manager. I always tell my clients, you have to become a manager of your money. And if you have, financial goals, because we all substantially program, and we have to just really eradicate that in our minds and think that, okay, yes, if I can save $10,000, statistically, most people are one paycheck away from being totally homeless. Most Americans don't even have $500 saved, and that is alarming. And I believe there's a study that says by, I believe, 2032, like the Black wealth is going to be zero. So it starts right now that we have to, take these steps and take action and educating ourselves and really doing what it needs to be done, and get an accountability partner in order to change the trajectory of our community. Budgeting is the gateway to financial freedom. You will not be able to buy your first home if you don't really know how to budget. You will not be able to buy your second home, your third home, and really become an investor if you don't know how to manage money. So what is that? How do we break it down? If you say, Nikema, like how do I even budget? So that is how I think about budgeting. It may be different for you, but this is how I break it down for myself and my family. So 10%, if you're a believer, should be going to your tithe. If not, charity, because you have to, too much is given, much is required, right? So as you earning money, it's always good to give back. And 10% should go for yourself, because I'm not the type of, finance educator that said, oh, save all your money, have, no leisure. No, you should definitely have, a fun account, but you can live that YOLO life only if your bank account says so. You cannot be out here, like I said, going to Taco Tuesday and your bills are not paid. You do not have an emergency fund. That can't be you. If you lock in with Cole, if you lock in with me, we can no longer be operating that way. All right. So 10%, you definitely need to have 10% for your emergency fund, because these emergencies will come. And when the emergencies come, if you don't really have, let's say you have like your savings account that you're building to buy, your home, but if you didn't have an emergency fund, guess what you're going to do? You're going to tap it into that, and it's never going to happen. And I've seen it, years and years working with clients, and they never achieve that goal because they don't understand the basic principle of having, different accounts and breaking down their budget. And of course, 10% is going to be going to your investment account. You should always have an investment account that's growing. And 60% of your income should go to your, your daily expenses. Now, when you are buying a home, what are the benefits of pre-qualifying? Before, people would call a realtor and say, hey, I want to see a house. And they'll just randomly send them, a home, or the home that the client wants, and thinking that they can afford it. And lo and behold, most times they're disappointed because they really couldn't even afford this home. So we're no longer operating that way, right? We're operating in excellence. So we're doing our due diligence, we're getting our finances in order, and we're getting our pre-qualification letter before we talk to a realtor. So that really helps you to get less stressed when you're shopping for a home. And the sellers are going to love you because you are prepared, you're qualified to buy a home. And realtors prefer to work with you, frankly. Quite frankly, now realtors will not even send your home if you don't have your pre-qualification letter. And again, sellers are more likely to accept your offer because you have secured financing. You've spoken to a professional like myself, and we've looked at your income, your credit, and we determined that you are eligible to buy a home. Now, before you even if homeownership is a thought right now, I highly urge you to start really understand the basics of your credit score. You can go to freecreditreport.com and pull your credit report, so that way you know what's going on, and if there's anything that you need to work on, you can be proactive. Because your credit score, also known as your FICO score, which is, there are many scores and many ways that credit is calculated, but the lenders, we use the FICO score. Okay, so that's a number that reflects your credit worthiness at any given point, because there's no way to really tell how you manage money. And when a lender pulls your credit score, it what tells us how you really manage your money. So it's definitely key to your financial life for you to understand how credit works, and if you have bad credit, to start working on it. Because the good thing about credit is, even if you have bad credit, it can get better. There are ways for you to boost your credit score if you're serious about having better credit. Now, there are 5 elements that you to your credit and increasing your buying power. Your payment history. This is how your credit score is calculated. So your payment history, your credit utilization, the length of your credit history, new credit, and credit mix. So these are the elements that's going to help you increase your buying power and help you build that generational wealth. Now, I always say that, credit is your adult GPA, because again, it tells us how responsible you are with managing your money. So this is the breakdown on how the score is calculated. So 35% is your payment history, which means that if you're missing payments, look how it negatively affects your score by just missing one payment. So, if you're forgetful, I encourage you to put your bills on auto pay, because that way you do not forget about missing that payment, because it really hurts your score. And 30% is your utilization, which means that you always want to be, below. I always tell my clients to stay below, 10%. So if you have $100, credit limit, you should be using $10 of that. So you don't want to go over, what you like 70-80%. That's a bad sign. That's going to tank your score, because it's going to tell the lender you're basically living off your credit card. So that is not good. So 15% is the length of credit. It's never good to close your cards, because that also negatively affects you, because we want to see, longevity when it comes to your credit score. So it's good if you had an account, even if you're not using it, I say don't close it. Try to maybe use it for gas, just really keep it active, so that way it's not closed. And you want to have a mix, of credit. For instance, the lender wants to see, how you manage, with different creditors. For instance, having, paying your rent, or having a car, having credit cards. So you definitely want to have a mix whenever you, for your credit, to kind of have a strong credit profile. All right, some things to consider, as I mentioned. Pay your bills on time. Repeat after me. Pay your bills on time, because that really affects your score. And get current. If you've missed a payment, sometimes you can go back to, your creditors if you've missed a payment, and you can explain it, if something happened. If you're not habitual, they'll remove that, delinquency for you as a one-time courtesy. So you can definitely take advantage of that if you have, a late payment. And, you can, talk to a creditor or a credit counselor if you're having trouble managing your credit, to help you get back on track to increase your score. Now, Some another things, that will, I believe now, before Joe Biden left, he passed a bill where we're now removing, we no longer can add the medical bills, which is good, but you can have parking tickets, can increase your score as long as, the creditor reports it as a delinquent account. That's going to, definitely affect your score. Any judgments or derogatory public record, that also can hit your credit card. Any missed payments, we've seen it 30, 90, and just people just, apply for cards, use them, and decide not to pay for them. That's not good. You have to be accountable. If you have a credit card and you've used the funds, you have to pay it back. And heavy credit usage, as I mentioned, can also lower your score. And I really don't recommend adding yourself to anybody as a cosigner, because if that person doesn't manage money well, that's going to affect you. So be mindful if you ever have to co-sign for someone, that it's someone who is responsible, so that way their mess up does not affect your score. How do you increase your buying power? Okay, so leveraging your income and credit to build more wealth. Did you know that 800 credit score equates to you having $100,000? Did you know that? Did you know that it's better to have a good credit than to have that liquid cash? Because you have so much buying power when you have high credit score, because having a higher credit score, you can negotiate the best rate possible. All right. So that is why it's important to, do the steps necessary to increase your score. So you can come to the table with a strong credit score. And these are the credit bureaus that report your credit history: Equifax, TransUnion, and Experian. Now, let's get back on track. So now you already know that in order for you to, become a homeowner, you have to get your credit in order, right? And becoming an informed buyer, which is what you're doing right now, taking the time to come here on this webinar to learn about the homeownership journey and understand what you need to do. The second aspect of, buying a home is proof of income. All right. Not only do you need credit, but you also need income. The reason why we say that you have to leverage your income to build your real estate empire, because as we know, I always tell people the best time to buy a house is when you can afford it, is when you have, the credit, the savings, and the income. Because at any given time, you may lose your job and now you're back to, zero, and you can't really afford, to buy a home. So that's why it's important now, if you're working, if you've been working, so in order to buy a home, you need to be, you have to have 2 years of history. Okay. So 2 years of history, it has to be in the same field. Okay. But it doesn't have to be with the same employer. So let's just say you're a nurse, you can be working with different hospital, but the underwriter, which is the person that actually approves the loan. So I'm not the one approving the loan. I'm just providing the documentation. I'm doing, the front work for the underwriter. That is the person that's going to say yay or nay to your application. All right. So when we're doing, the loan, I'm going to ask you for, especially if we're doing, we'll go into details about the type of loans a little bit later. But if we're doing like a federal administrative loan, which is the FHA loan, or a conventional loan, we want to see, the 2 years of income history. So I'm going to ask you for your last 2 years, W-2s, last 2 years of tax returns, and at least a month of pay stub, about 4 pay stubs, depending on how you get paid. Okay. And the next step, you do have to go through, the loan application, online, just applying for the loan, giving us the information about where you work, where you're living currently, and so on and so forth. And then after that, once I analyze all of your documentation, I will then tell you, based on the amount of money that you're making, this is how much in your debt, this is how much you can qualify for. And we also want to see, your proof of asset to make sure you have, the money available for the down payment. And we want to see, you have to provide your driver's license or your passport, because we want to know it is you who is buying the home. And we want to make sure that, at least you have a 620 minimum credit score, and then you can secure your keys. Now, we do have loan products that go as low as 500, but I'm not talking to the 500 credit score people on here, right? I hope not, because if you are, 500, your score is 500, I would rather you improve your score so that way you can have a better interest rate, because when you have a low credit score, then your interest rate is going to be higher. A higher interest rate means a higher monthly payment, and nobody wants that, right? Now, the mortgage process. So the first step is, again, doing that pre-purchase consultation. This is where I sit down with you, or we do a Zoom call to really understand what your financial goals are. So that way I can help find the best product for you. Then you would obtain your, pre-approval. Then after you obtain your loan approval, then you go back, with Co, and you start negotiating the home that you want, and then negotiate the process, on the price and so on. Now, after that, you want to do a home inspection. So the home inspection is highly recommended, because sometimes there are things that the seller does not disclose, and you want to make sure that you do your due diligence, because this is a big investment that you're making, and doing that home inspection really protects that investment for you. And once you do that, and if you decide to move forward, then we will update your application. By that time, the process can take about 30 to 60 days, because by the time you go look for a home, maybe some of those documents have expired. If we are going through the loan process, then we may need to update your documentation. Now, after you apply for the loan, we have to order something called the appraisal. So the appraisal is what the lender orders to determine if the value is true, because sometimes you have sellers that overinflate the value of their property. They can say, oh, the home is worth $500,000, and when we actually do our appraisal, which is to assess the value of the home, it's like $450,000. So that's why it's important for us to do that, because we don't want to loan on a home that is not the true value. Now, after that, again, you go back to the home loan process, and I submit all of your documentation to the underwriter. The underwriter, again, is going to review the document and look at all the aspect of yourself, okay, and determine if you're a good candidate, if you're going to be able to make those payments on time, because they have to assess the risk. Because if you're coming to the bank, ask them for hundreds of thousands of money, they're going to dig. They're going to ask questions. And when they do, you have to work with me, and Co to provide those documents, so that way we can get you closer and closer to the closing table. And then you pick up your keys, and congrats, you're a homeowner. That's the journey. Like I said, the loan application process can take 30 days, but sometimes we can close less, depending on all the parties involved. It can be 21 days or less. Now, let's talk about, the type of loans that are out there. So we have the FHA loan, which is, most first-time home buyers, they qualify for that loan, because with the FHA, again, you can qualify as low as $500 credit score, but with a 500 credit score, you do have to put more down. You have to put 10% down. But if you have 580, you can do 3.5% down. So if you're looking at a purchase price of 300,000, you're going to need 10,500. And generally, closing costs is about 4%. So you need about $12,000. And the good thing about working with a savvy realtor, he or she can negotiate seller credit for you, so that can help you lower that initial investment. So, with the home of 300,000, you're looking at an initial investment of 22,500. Now, the conventional loan, you need 3% down. It's the same thing, as far as like having that percent down. And with 300,000, you're going to need $9,000. Again, $12,000 for closing costs, and you will need $21,000. However, there are a lot of down payment assistance programs. So with the down payment assistance program, there is a caveat. You do have to have a strong credit profile. So you do have to have at least 640 minimum for your credit score to be able to get assistance for the down payment. And, if you were to qualify for a first-time home buyer program, just look at how much your initial investment will be for a $300,000 home. You're only looking at for $4,500. Now, the FHA loan product, it's a very good product for first-time home buyer, because you can purchase a multifamily with that loan and really start building your empire and become a real estate investor. Because the way that you're going to look at it is that if, let's just say you buy a duplex, right? You can live in one side, and the other side, you can rent it, and we're going to be using that rental income that you're going to get from that other side of the home and help you qualify. So this is really a hack for you to really build that wealth, where, traditionally, if you're buying, multifamily or buying investor homes, you need at least, 5 to 10% down. But as you're starting your first home, if you really, want to, build your real estate empire, build your wealth, I highly suggest into looking how you can, buy a multifamily. Because I always encourage, my clients is that your first home is not going to be your forever home. Okay. So a lot of times people don't buy a home because they want that perfect home. No, you can build on it. So when you buy a house, that house is literally a bank for you, because there's something sweet that's called equity. All right. So when just think about where you're living now, right? If you're renting and you're paying hundreds, $1,800 a month. I mean, even more, because rent prices are astronomical right now. And you spend, 12 months out of the year, you're spending that money, and that money is gone. There's nothing that you can do. But when you have your own home and you have a mortgage, guess what? You're building equity. So at any given time, there's a product called Home Equity Line of Credit, which is essentially you borrowing against that equity. And you can borrow against that equity, and you can take that money from the home that you have, and you can buy another house, right? So this is how you start building. So don't despise small beginning, because that small home, or the home that's worth maybe, $250,000, doesn't have all the nice kitchen that you want, or the big closet that you want. It's okay. I would much rather you buy a home, secure, the wealth through, real estate. And then after that, you can always, buy a second home or buy a bigger house. So that is definitely key. So we talk about, your debt to income. Your debt to income, whenever you're buying a home, is how, your current liabilities and divided by your gross income before taxes. That's how we're going to determine how much money, how much room do you have to be able to afford a mortgage. It's key. Okay. Now, so other loan products that we have, the jumbo loan product, that's any home that's, in the $1 million range. And if you're a veteran, you have the Veteran Administration Loan, which is the VA loan, and that's for, active and reserve military, and spouses also may qualify. And with the VA, the good thing is that you have a zero down. So you only have to think about having the down payment. And there's also a loan called the USDA loan. So this loan is good for homes, that are in rural development. So there are some areas where you can also get that, 100% financing, because they really want people to move in that area, and they give you an incentive if you buy in those, underdeveloped areas. As a creative finance strategist, we have, loan products for self-employed. If you're self-employed, and sometimes with my self-employed borrowers, you take so much deductions and you don't have much to show that you're really actually making the income that you are really making. So we have loan products, the bank statement loans, where we're just looking at, the deposits that you make, on a daily basis, however your business operates. And then we will calculate your income based on that. And we also have loan products where it's called, the profit and loss statement that your CPA will do, and we can do that. And for my investors, so if you do own a home, you're already a homeowner, there's another loan product when you're buying investment property, which is called a debt service ratio. You probably have heard the DSCR. There's an acronym. So with that loan, the beauty of that loan is that we don't even look at your income. As long as you have, that good credit, at least, some lenders will do 620, but you definitely want to be higher than that. We will just look at the home, like how much the rent is. And as long as the rent is more than, it's a one, ratio 1-to-1. So as long as the rent payment is higher than your mortgage payment, then the bank is going to see it as, an income producing property, and you'll be able to buy the home. So that's how a lot of people are building their real estate empire, building their real estate portfolio with this type of loan, because then once you have that loan, you can, as I mentioned, do that home equity line of credit for that home that you have and continue to buy other property. So that's how it starts. It starts with that one, just buy that first home. In 6 months, if you really want to be a homeowner, do it. Buy that first home, and then you can build from there. Why now? Why should you buy a home now? Real estate is the fastest way to build wealth. In a way, the safest too. Because once you buy that house, you can pass your keys to your children. You can use that equity to buy, other properties. Or even when you take that loan against your home, you don't have to buy a house. You can invest in another business. So you can always, be creative and find ways for you to build wealth for your family, because that's all it's about. It's finding ways to build wealth. Now, I know some of you may be like, oh my God, but rates are so high right now. Why should I buy? Why should I buy? Well, guess what? Right now in this market, when you're buying, you are not stuck to the rate. Okay, you're going to marry the house for now. Again, even if it's not what you truly want, but you're going to fall in love with the house, and you're going to date the rate. The good thing about rates, even the real estate, mortgage, it's cyclical. All right. What goes up always comes down. I promise you. I've been in mortgage for about 12 plus years now. So there's going to be a time where rates are low. and you can refinance that home and take advantage of lower interest rates. But if you don't have anything, there's nothing you can take advantage of. So even though the mortgage payment might be, $100 or $200 more than you would actually want to pay, I still will advise you to buy a house if you can afford it. I don't want you to do anything that you cannot afford. If you can afford it, right now is the best time for you, to do it. Take advantage of now. Stop procrastinating because it costs you to wait. The more you wait, because I don't know, if you followed along, the history, we're in 2005 right now, around the pandemic, like around 2020, rates were in the threes. All right. So imagine if you took, the step to say, you know what, I was going to buy a home 5 years ago, you would have been so good. But still, if it's okay, even if you didn't buy during that time, buy now, because there was a time where mortgage rates were at 11%. Right now we're in the 6, 7, but back some time ago we were in 11. So you never know, it might get to 11, and then you're gonna be like, oh no, I can't, I cannot afford to do it. So take advantage of now. And, this is a great way for you to, other opportunities, to discounts and business credit, because guess what? I don't know if you guys pay attention to when you're calling, for instance, to, for a quote for your homeowner's insurance. Don't they always ask you, are you a homeowner? Yes or no? You can answer that. They always ask you, are you a homeowner? So you get discounts when you're a homeowner. So it really is advantageous for you to buy a home. There are many types of people, maybe 2 types of people that listen to this presentation today. All right. The small action that you make is going to be pivotal to your success. Some of you will be like, you know what, this was a great presentation. I learned, some information. I may still have some questions. I'm going to do it myself, or I'm going to wait. That's maybe you, that you're just going to just sit on the sideline. You're never, ever going to do anything. And there are people who are action taker. So I'm asking you right now, which one are you? Are you the type of person that says, you know what, I need to know exactly, this was a good overview, but I need to know exactly where I stand financially. Where am I? So this is the time for you to really lock in with me and book your free discovery call. So that way we can map out your path to home ownership. That way I can give you your blueprint to home ownership. If it's going to be a 6-month plan, if it's going to be a year plan, or even a 24-month plan. But guess what? If we make a plan, we will achieve it, right? So I want to be your accountability partner. I want to be your finance girl, your finance bestie, and help you truly make that dream of home ownership come true. So I will put the calendar link in the chat. If Go can put it in the chat for us.
It's
so
there.
That way, okay, it's there. So you to book your call, book it. It's only, 15 minutes for us to just go over what your goals are, and do that consultation. So that way we can determine how we can help you get that first door. And then we can help you get multiple doors, because that's all we're all about. All right. So now this is Q&A time. And this is how, I would love to connect with you all. If you're not following me, please follow me on IG. I'll love to, because I always post educational information. This presentation, we don't have enough time to really go into it. So if you have more questions, definitely would love to, connect with you. Please follow me, Nikema_Tureen on IG. This is my phone number, and my website is financinglegacies.com, where you can apply. But please book that call so we can really help you and turn you into pre-approved buyer and get you that stamp of approval. So now this is Q&A time. Thank you so much for your time, for listening to me, and I'm here to answer the questions now.
So we have a couple questions. The first one is, can you share down payment assistance programs? And we do have people watching from all different states. So I don't know if it's state specific, but do you have recommendations for down payment assistance?
Yes, so there are different down payment assistant programs. So we have lenders who have their own in-house down payment assistance programs, but there are many municipalities that have their own program. So definitely my company is licensed in so many states. So, they just have to lock in with me, and I will, if I'm not licensed in that state, I will definitely refer them to a partner who can assist them, who can guide them and give them more information on where to get access to those first-time home buyer grants, because they are out there. They're there to assist because, we really want people to buy homes and help them with the down payment assistance.
Okay, and then someone asked about NACA and then wanted to know, if you do go through NACA, do you have to live in your home for 5 years?
So NACA, I don't do NACA, and I'm not familiar with it because they're their own entity. So once you go through NACA, they're going to go through all the steps and tell you, hey, if you're going to be applying for this program, these are the stipulations. And most likely, with most down payment assistance, you have to be living in the home for at least 5 and some 10 years. So more definitely, I would just refer to the representative, and they'll definitely tell you if, because sometimes the programs, they change their guidelines and their requirements. So it's always important to just stay connected to that, professional, that mortgage professional who is offering that program to tell you the most up-to-date information.
Okay, and then I wanted you to clarify, and you all tuned in. If you do have any other questions, make sure you drop them in the chat. But one thing that I wanted you to clarify is, how is the term first-time homeowners defined? Because in my mind, I thought, you had to be someone who had never purchased a home before, and then I realized that wasn't the case. So can you clarify that?
Yes. So before that was the case, that you had to not have owned a home in order for you to be considered a first-time home buyer. But now the rules have changed. There's if you have not owned a home within the last 3 years, you're considered a first-time home buyer. And there are some lenders with their down payment assistance and with their program. Let's just say you own a home right now. As long as you're selling the home, you technically will still be able to qualify as a first-time home buyer.
Thank you. Good to know. Okay. And then is a loan or mortgage officer different from a lender?
So it's really all in the same. So when you're the lender, when you think is the general word, when we're thinking about the lender is the person who's going to give you, is going to lend you the money, for instance, right? So I work with multiple lenders. They're the one with the cash, right? They're the one with the collateral. So that's what, when we say lender, that's what we're talking about, where I'm going to be shopping for your loan. So as a mortgage broker, the beauty is that I get to shop around for you and give you the best rate, right? So that's what the lender is. And I'm considered a loan officer. I represent that lender, if that makes sense.
So explain quickly the difference between coming to you to get pre-approval versus like going to a bank or a credit union. I think you just mentioned it, but just explain that a little bit.
Of course, yes. So, sometimes going to the bank or the credit union, you're kind of limited as far as, the options that you have. Many of them don't have, access to all of those lenders that we have access to. And when you go directly to the bank, you get, the market rate. But when you come to, like an independent mortgage broker, you're essentially going into a Costco or Sam's, and you're getting the rate at a wholesale level. So which means that you're getting a discount versus going to, the bank or the credit union. So most of the time you're going to be saving on the back end by doing your mortgage with an independent broker. So that's the difference.
And then last question around how getting pre-approved affects your credit. So, we hear like if you're trying to, buy a car, you don't want to have, 10 different inquiries hitting your credit because that could lower your credit score. How does it work with coming, to you? Is that going to affect their credit score in any way?
So because even when you're buying a house, you have the credit is good for 90 days, and it doesn't negatively affect you because the banks, the way that the credit score is calculated, they know that you can be shopping around for a mortgage. So you have that 90-day period. I hate when I hear that, it's gonna lower my score, it's gonna lower my score. No, it does not lower your score when you have, an inquiry for a mortgage, for instance.
Okay. And then how are you as the loan officer compensated? Does the buyer compensate you, or who does?
Okay, so as a mortgage broker, there are two ways that we get compensated. So we can either be compensated by you or be compensated by the lender that we're sending your loan to. Now, the difference is that sometimes if you decide to pay my commission, it may benefit you by having, a lower rate. So that's why we have to have that conversation, so that way I can see what's best for you financially. And there are other times where, the lender will just pay my commission, but it may come as a higher rate to you because, nothing is really free. That's what I always tell my clients.
Got you.
So you just have to see what makes sense for you financially.
Okay. And is that what they should book the free discovery call for? Or what type of questions will you cover or information will you share when they book the call?
Yeah, so when I book the call, is really to understand what their financial goals are. How soon do they want to buy? And, if they know where what their credit score is, what they need to do to improve, their credit. So these are the conversations that we're going to be having once they book that call.
Perfect. Well, Nakima, I appreciate your time and all of the information and resources that you shared. I dropped the link in the chat. You can also see it on the screen here. Go ahead and book your free discovery call if you have additional questions or questions that are, specific to your situation, that Nakima can just ask you some additional questions so that she can give you the answer that will really be applicable to your situation. Thank you all so much for tapping in and tuning in. The replay for this conversation is going to be available at the same link that you originally joined us at. So if you missed any part of it, if you were tardy for the party, you can go back and hit the replay. It'll be available for you. And I thank you so much. Michelle said this was a great workshop. Thank you so much, Michelle, for being here. We appreciate your time and attention, and you all have an amazing night. And if you happen to be in the market for your real estate agent, don't forget your favorite home girl has you covered. You can send me an email at coriel@kw.com or shoot me a DM on Instagram, and I am happy to help. Thank you. Have an amazing night.
Bye-bye.